Welcome back to Alpha Recap. Glad you could join us after the close. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. We've got a pretty bifurcated tape to unpack from the last trading day, so let's dive in.
So, quick headlines to set the stage. Microsoft led the market with a big one-day pop. Anthropic got conditional permission to restore a model for select partners and government agencies. And meanwhile, several microcaps crashed hard, with some seriously wild numbers.
Yeah, it felt like two shows at once. Big tech strength and small cap drama.
Totally. Markets closed with gains in tech, and Microsoft finished the day up about 5.7%, closing at $372.97, and volume was higher than usual.
That was the standout. Elevated volume matters here. Analysts use it to tell whether a move was real conviction or just a thin spike.
Right. And the other thing is, when a megacap moves like that with participation, it can rip through fund allocations and index flows.
Some people argued Microsoft's move was just momentum into a long weekend, while others linked it to the Anthropic news. I mean, when you step back and look at this, both narratives could be true.
Exactly. Correlation isn't causation. The rally shows conviction, but we can't cleanly tie the Anthropic permission to Microsoft's one-day gain.
Speaking of Anthropic, that was the other headline. The U.S. administration granted conditional permission for Anthropic to restore access to its Mythos model for select commercial partners and government agencies.
Analysts called that a constructive step for enterprise AI, but they stressed it was measured. Export controls and partner lists limit how fast this can translate into revenue for public companies.
So, what really stands out here is that it's an incremental tailwind, not an overnight re-rating of the AI sector.
Yeah, absolutely. Because Anthropic is private, any valuation shift doesn't hit public market cap directly. The real effect is signaling. It nudges sentiment for AI integrators and cloud providers, but slowly.
And the conditional nature matters. Selective access, controls, that kind of nuance means only certain partners will see benefits first.
Which brings us to the other side of the tape. Microcap turmoil. This part was rough.
Yeah, that tracks. CELZ plunged about 40% to $1.20 on roughly 529,000 shares.
RNWWW fell about 40% to essentially zero. That flags potential corporate or liquidity events. And GDC dropped about 13% to 1 cent on roughly 473 million shares.
Those are the kinds of moves that make analysts ask immediate questions about filings, halts, or forced liquidations.
Right. When low-price names move that hard, especially with outsized volume, you worry about trading depth and whether prices reflect real supply and demand, or errors, stale quotes, or administrative quirks.
Short reactions.
Hold on, say that again?
Immediate due diligence is the first step. Check filings and trading halts before drawing conclusions.
Analysts were pretty unified on a few points. Number 1, volume matters. It's the lens to interpret moves. Elevated participation in Microsoft's rally looked like conviction. Heavy turnover in the microcaps looked like liquidity stress.
Number 2, regulatory nuance on AI. People agreed Anthropic's move was constructive but constrained. Again, incremental positive, not a broad release.
And number 3, microcap fragility. Experts flagged sudden big percentage moves in penny names as red flags for position sizing and liquidity risk.
There were also debates. Some saw Microsoft's rally as pure momentum or flows into tech ahead of a holiday. Others thought sector catalysts, like AI commercialization narratives, played a role.
Both can be true. Flows and positioning often amplify any credible catalyst.
Yeah, and then there was the speed of monetization debate on AI. Analysts welcomed Anthropic's permission, but argued it won't immediately boost revenue for public AI beneficiaries because of controls and selective partner rollouts.
Good point. Now let's drill into Microsoft a bit. A one-day move of about 5.7% in a megacap is meaningful. It can change allocations for funds and influence volatility expectations.
And the elevated volume suggests institutions participated, which to technical traders is a momentum confirmation. For long-term holders, Analysts said it might reflect renewed confidence in Microsoft's enterprise AI positioning. But caution was advised about assuming regulatory frictions are priced in.
Switching back to Anthropic, the conditional approval reversed a blanket restriction, but kept meaningful export controls. So it's a measured reopening of access to an advanced large language model.
Right. It's like opening one door slightly while keeping several locks on the rest. The market reaction was muted in public stocks, but the signaling value is real.
Now, the microcaps again. Those names are cautionary tales. Large percentage moves in low-price names can come from negative corporate news, forced liquidations, or just thin liquidity magnifying small trades.
Exactly. And when you see something like 473 million shares trading at 1 cent, that screams, check the filings. It could be legitimate, but you need to verify.
Short reactions.
Oof. Brutal day for speculators.
So who did this day matter most to? For long-term diversified investors, Microsoft's momentum is a note on portfolio drift and relative performance. But analysts urged sticking to long-term theses.
Active traders and quant strategies saw both opportunity and risk. Microsoft offered a possible momentum continuation setup, but holiday profit-taking could follow. Microcaps raised huge execution risk.
For income and fixed income folks, these equity moves were mostly peripheral. But spikes in equity volatility can influence equity credit correlations and broader beta.
And for risk managers and allocators, the day reinforced why liquidity cushions, stress testing, and tight position limits in low liquidity names matter.
Okay, time for some practical next steps analysts flagged for market participants.
First, always check volume and filings when you see big moves. Volume confirms conviction. Missing filings around extreme moves in microcaps raises the risk of stale or erroneous prices.
Second, watch regulatory signals on AI closely. The Anthropic decision shows regulation shapes commercialization timelines, so track partner lists and enforcement guidance.
Third, reassess position sizing for low-price names. Limited liquidity and amplified percentage swings argue for conservative sizing and strict risk controls for speculative exposure.
And fourth, use multiple data points to attribute moves. Combine price action, volume, news flow, and filings instead of leaning on a single hypothesis.
Honestly, I was a bit surprised by the scale of some of those microcap volumes. It was dramatic.
Yeah, that tracks.
Quick check. What's the bottom line we want listeners to walk away with?
Bottom line, Friday's tape was bifurcated. We saw a reaffirmation of large cap tech momentum led by Microsoft, alongside sharp, conviction-driven declines in small caps that highlighted liquidity fragility.
And the Anthropic permission was a measured positive for enterprise AI adoption. But analysts emphasized it's unlikely to be an immediate, broad-based earnings accelerator because of conditional access and export controls.
Volume and corporate disclosure mattered. They were the arbiter separating durable moves from headline noise. For investors, balance enthusiasm for structural themes like AI with disciplined risk management around liquidity and position sizing.
Big picture. Be excited, but don't be reckless.
Short reactions.
Good advice.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more highlights and a look at what filings and volume tell us next. Bye for now.